One of the things that we're hearing at the conference is that there might be shifts. There might be shifts in the economy. There might be shifts in the lender outlook. Also, site selection. Sometimes there's not enough dirt or dirt in the right places. Is there anything from your perspective that you're also seeing that would impact the industry and in particular hotel equities and how you move forward into 2017?
Well, I think as the pundits continue to say that the supply is racing forward, I still think that there's still good metrics out there, especially in the lending community. If it's at the right flag, at the right location, that there's still some great lending opportunities. We have some fantastic partners that want to continue to do business with Hotel Equities, and our partners with the right flag in the right spot. And I think as you see some of the additional brands that are even coming out at the conference and that will be coming out on the back end of the year, it's really exciting to see how that's going to progress going forward.
Does that pique your interest? I mean, there were 3 new brands launched here at the lodging conference from yesterday to today. And many of them have, like the Trump Hotels new sign, it has their own management. Trump Hotels will be managing. But as new brands come on, do you vet them and look at them and put them under a microscope and say, that's new, maybe we'll take a look at that?
But we do. So you said there was 3 that came on today, that were announced today. There'll be another 3 before dinner. So look, as the industry continues to consolidate, and there's, the Marriott Starwood acquisition is now consummated. Hilton continues to look for white space on how they can chip away and identify additional swimming lanes that maybe are not addressed currently based off of demographic and end user. So we do. We evaluate that as all part of the process that, once again, we take a very thoughtful approach to. And if it's a new brand, it has to hit all the boxes. Once again, we make sure that it's a partner that we are aligned with. It's a brand that we think there's a need for. So we have no interest in doing it for the sake of doing it. It's still got a new brand or not. It's got to hit all the boxes that we have identified as being critical for success.
We heard this morning during the general session that there seems to be a lack of portfolio sales, and terms seem to be more of one-offs. Yet last year, Hotel Equities added a portfolio of 21 properties. Was that an unusual thing, or is that people just recognize your expertise in that area, and that's something that you see continuing to happen for your firm, if not other firms? Thoughts?
Yeah, it's you certainly don't see as many portfolios right now, and I think over the last 12 months, people are a little bit more on a hold mechanism to find out what's really going to happen in the market and in the cycle. I think we'll see some of that unloose a little bit. I think we heard just actually today of a couple of nice small portfolios that are coming back into market, which we're excited about from a purchasing standpoint as well as from a management standpoint. A little unusual to typically grab a package of 21 assets. I think the opportunity was there. There was good alignment, and it was an opportunity. We were already in those markets. We tend to pick up hotels when we're in markets. We do well from a RevPAR and flow standpoint, so that work kind of gets out a little quicker. So we were already kind of embedded into those markets last year, so it was a natural fit for us. A thoughtful approach from Brad's team as far from an operational standpoint was to make sure that we had the right infrastructure in place prior to our growth. And that was thoughtful and strategic in the way we did that. So we had the manpower, we certainly had the regional teams to do that and pick that portfolio up. So we, again, geography certainly doesn't scare us, but it's about doing business with the right partners.
One of the things he just mentioned was strategic, and things that we hear at hotel business is whether someone or some company is strategic or opportunistic. Brad, how would you characterize Hotel Equities at this point, and what does it look like for 2017 for the company?
Yeah, so we're a little bit of both, depending on the opportunity. So we always try to apply strategy against the opportunity. So I think Hotel Equities, like most organizations that are successful, look for that opportunistic deal, if you will, where we, once again, make sure that we go into it with eyes wide open is we slow the pace down, we make sure that we're vetting it properly, that our due diligence is as rigorous as anyone's out there to ensure that we're applying that strategy against the opportunity. And if we feel like we're being rushed on the deal, once again, we'll walk away. We need to make sure that we take our approach to each opportunity. So I think moving forward in 17, look, as Joe touched on earlier, while the prognosticators are saying that we're seeing a slowdown and that 17 is going to be flat or possibly up a point, the fact of the matter is it's coming off of a record-breaking year for the industry. We think the fundamentals are still very strong, not only from a key metric standpoint for our existing assets, but from an opportunity to go out and acquire additional assets. So we're still very bullish on 17, and while there may be that tipping point where new inventory is hitting the demand or surpassing the demand, rate will still be up. It's a market-to-market case, and we still feel real good about where we're at going into 17.
Terrific. It seems like the pace is keeping pace. This is Stefani C. O'Connor at Hotel Business Magazine, and we're signing off at the Lodging Conference. Thank you.